Folks, this Middle East thriller looks like it's heading into the final round. It's rare that ultimatums, potential deals, and political fallout have had markets in a chokehold this long, like they have these past few weeks. Traders really don't know how to position because the US government and especially Donald Trump is keeping both outcomes on the table. On one hand, he flat out says he can and will blast Iran back into the Stone Age. On the other, the message is basically, relax, a deal is almost a done thing. What we've seen is Bitcoin and altcoins have held up a lot better over the last few days. Whether that means we're about to get real relief or build upward pressure, and what could finally break this deadlock, I'll talk about that over the next few minutes with Oliver Michel from tokentus. Great to have you, Oliver.
Hello.
After a week where we've basically been in the crosshairs of the Middle East conflict, it now looks like we're closing in on a deal right up against the final deadline or maybe even before it. Still, we had obviously seen that the uncertainty is there. I just said it, heaven or hell. Those are the two outcomes we're looking at. Even if we can say, okay, oil prices and the fallout are going to stay with us either way, that's not really in doubt. But what are you expecting right now in terms of how this plays out in the Middle East?
Yeah, Johanna, yesterday when I was getting ready for today, I was still saying I can totally see this wrapping up fast. Today, after everything that went down overnight, and with the Iranians' counter-proposal, I'd rather say, I really hope they reach a deal today. Drop the pride and the tough guy posturing, because enough damage has already been done and they need to agree not just at all, but pretty quickly. Because, you know, Americans aren't behind this war, and this war costs a ton of money. So Donald Trump really has two problems. It creates more costs, and of course, he risks losing votes with the midterms coming up. So yeah, I can totally see it, and I really hope this ends and ends fast. But even then, even if that happens and that wish comes true, like you said up top, it won't just flip back to normal right away. We'll be dealing with the after effects for a while, but sooner or later the noise will die down and we'll be able to get back to the day-to-day.
You already brought it up, and we also wrote about what options are on the table right now in our Telegram channel, Crypto Insights. We've already seen Iran's plan too. There's still a lot of homework to do, or they really need to move closer to each other. This afternoon there's also supposed to be a UN resolution about the Strait of Hormuz. Maybe something starts moving there too, but we just have to wait it out. At least the positive thing is futures, the DAX and the other investment options are all in the green right now.
Yeah, in the last 15 minutes something happened. Something must have happened.
Yeah, something good, hopefully. Still, let's run through the hard news we've got, the stuff you can't really argue with. Let's look at the Fed, still trying to juggle that gap between a basically weak job market and, on the other side, rising inflation fears. Right now, even if Jerome Powell's days as Fed chair are probably numbered, you really wouldn't want to be in his shoes, right?
Yeah, I mean, basically, the market tells them what they can do, what they should do, whatever, and you can see it. Through the end of next year, the market isn't pricing in a rate cut, and also not a hike. You already set it up. With the tariff mess and oil prices climbing, that's obviously stoking inflation from that angle. So everyone's basically praying it doesn't go that way, but at the same time, people are hoping for a cut because the economy is slowing a bit. And behind the economy, of course, is the labor market. We had a whole week of jobs data, tons of info came out last week, and if you look here, the unemployment rate has barely moved. In February it was 4.4%. For March 4.4% was expected, and it came in at 4.3%, so that's roughly around 7.2 million people out of work. So yeah, not much has changed. The first real wake-up call here was the non-farm payrolls report. In February, we were down 133,000. They expected 65,000 for March, and it came in at 178,000.
This looks good at first glance.
Awesome. And another good thing, January got revised up from 34,000 to 160,000. And like I said, February got revised down from minus 41,000 to minus 133,000. So if you look at the plus and minus, you can say at first glance, yeah, it all looked pretty good. Second.
But the second look wasn't good, and that's exactly what you just said. You see that huge 178,000 for March, then you realize bottom line, it's not something Powell can point to and say, yeah, we've got a stable job market.
Yeah, he says it all the time, but bottom line, it's not true, and he knows it. So second look at that 178,000. You said it reads great. Yeah, 178,000, but if you put that next to the 181,000 new jobs created in all of 2025, you gotta ask how in one war month you can create almost as many jobs as in the whole year before. The answer is pretty obvious. It's fake. That can't be real, and at some point it'll definitely get corrected, but in a month or two, when nobody cares anymore. For now, it's 178, and that sounds great. So yeah, this is exactly what we keep saying happens. They put out numbers that are supposed to move the needle a bit, supposed to send a message, and then when the revision comes, the second estimate or the third estimate, and it drops a lot, nobody cares anymore. And like I said, 181,000 for all of 2025. We already said it last week and the week before. That doesn't match at all with what got created in March. And the second thing that came out, which I just want to repeat here, we had the FOMC meeting on March 18th, and in the press conference afterward, Powell pointed right at this again. He said basically in the second half of 2025, almost no new jobs were created, and that really worries him. And that no new jobs applies to the private sector, meaning if you look at non-farm payrolls, government is in there too. If you strip government out, you're left with the private sector. And there were no new jobs created, which the other way around could mean the Trump administration hired massively in government, so the numbers look like that. Pump it up. So yeah, we know the job market is weak and it keeps getting weaker. The economy is weak too and it keeps getting weaker. And even the prettiest, cooked numbers won't help. Just my opinion.
Still, we have to wait until the revisions actually show up clearly. But last week we got 2 more data points, one good and one bad. What were they?
Yeah, it's these 2 lines here. And it really shows the mixed signals we've got in the market right now. Short term, things still look pretty positive and they're still trending up, like we'll see in a second. US indexes are expected to move up, and you can see that here in the ISM PMI. That's the economic barometer. The business cycle indicator behind it. At least a lot of pros buy into this whole thing. And we know for the last 2 or 3 months, it's been over 50, so we're in expansion. And that's a big plus. And historically, when it's over 50, US indexes and also our Bitcoin and our crypto have tended to get pulled higher too. So last month we were at 52.4, the call was 52.5, and it came in at 52.7. For the PMI, which gives you a bit of a preview of where the economy is heading, that's really good news. Good in the short run, but In the medium and long term, the problems are headed straight for us. JP Morgan's Jamie Dimon sat down for an interview and said, like we've been saying for 2 or 3 weeks now, private credit, meaning loans to companies, right? And in his view, the bank loans and the write-downs from loans that can't be paid back at banks will be way, way bigger than people generally expect. And I mean, we learned that lesson in the 2007-2008 banking crisis. And those are the first little dominoes to fall, the small banks, then the banks get bigger and bigger, and at some point,
even the big ones go down.
So you see that same short-term versus mid to long-term split here again.
Another thing that could definitely come back to bite Donald Trump in the midterms. This week is pretty jam-packed, even though for us it's actually a short week after Easter, but we've also got Donald Trump's ultimatum postponed for the 3rd time, and probably the final one, expiring Tuesday night into Wednesday at 2 a.m. our time. So of course you're watching that closely, and you just brought it up, or we've talked about it a few times already. It really is time to reach a deal, and there's a lot of homework to do, especially with how different the plans are between Iran, Israel, and the US administration. Ideally, you'd want to find a solution beforehand, of course. Either way, we're watching the deadline closely. 2 a.m. our time, 8 p.m. US time. And on Thursday, we also get the February PCE data. And of course, the US GDP for the 4th quarter of last year matters too. Yeah, and the second estimate was a real letdown. Growth got cut from 1.4% to half of that.
And 1.4 was already bad compared to...
It was lousy, exactly. But dropping from 1.4 down to 0.7, we'll have to see what the final print shows. Whether it moves back toward 1.4 or whether we have to swallow that, it's really just 0.7% growth. Then on Friday we get the March CPI, so this week is absolutely packed. And I think the economic data could get pushed to the side depending on how this deadline here plays out.
Yeah, that's why I said up front, I'm hoping something happens. There's the Americans' 15-point plan. And last night the Iranians countered with a 10-point plan, and from what I can tell, they're miles apart. You can't bridge that in a day, in my view, unless things are already a lot further along than what
is going to be published.
What got published and what info we normally have to work with. So yeah, the markets are still reacting really strongly to good and bad headlines. And basically, we've only got today to stop this ultimatum. Unless somebody really ends up losing face big time.
If I think back for a second, we always talk about the prep and what the interview is going to be about. And before Trump pushed the ultimatum back the 3rd time, we'd said, well, either way, by Tuesday's next interview, we'll know where this is headed. Escalation, or maybe the dove with the olive branch. Now, of course, we've got this slight issue that the ultimatum expires pretty soon after our interview. But either way, like you said, the markets will react. And
so we're definitely going to go over the negative scenario of the ultimatum expiring again right now on the charts and show where that could push the markets.
Let's look a bit closer at the scenarios on the chart, like you said. Today we've got the Nasdaq and the Russell 2000 again as the main chart setups for how this could play out, and of course what that means for crypto too. We'll start on the tech side with the Nasdaq 100. Last week we talked about the support zones on both indexes. The big question is, did they hold? Yeah, they held, but maybe we can position a bit smarter around those support areas. How does it look?
Yeah, so here we've got the Nasdaq on the daily chart, unlike last week. Last week we looked at the weekly chart and showed how from Bitcoin's low, meaning the bear market ending, the whole thing started moving up. And this is basically the top area we're trading around on the daily chart. And we saw how we dropped down from here. That was a correction, and I've always said I wanted that before we then hit the final top around 27 to 28,000 points. Then the whole thing moved lower, and that drop was of course made worse by the Iran conflict flaring up right around here. And with that, the support that was basically defined by this line here broke, and we moved down. And then we said, okay, there's another target support zone at about 22.6 to 23. That's basically mapped over from the gap between those two lows. And we had marked out that target zone, and the Nasdaq did run right into it and basically stopped right in the middle. That was pretty much a direct hit if it actually holds. And since then, the Nasdaq. And you can see the move here, despite all the back and forth with the Iran conflict, it's been pushing up, and futures just now. Which is why I said something must have happened in the last 15 minutes, turned back up. So I can totally see us moving higher again now. Unless we get bad news tonight. Our time. Yeah. Heading into Wednesday. So it's totally possible we'll get another leg down. And like we said, the really critical support is around 22,200 points. That's the high from February 18th, 2025. If you want to look at it more closely, just go back to last week. On the weekly chart, you can see on the left where that high is and how it carries over to the right. So those are the two support zones we should be watching now. I'm not really an Elliott wave guy, like I always say, but this is the first move. Maybe that's the second, and this is the third. And if we actually get some bad news, that'd be 4 and 5 before it turns back up. And like I always say, Elliott waves are easy to count. Once it's all over, if we get good news and it keeps pushing higher, then it was clearly 1, 2, 3, 4, 5, and up we go. So you can count it however you want. Either we really found support here and we move up, or we dip a bit more, but it really shouldn't drop below 22,200 because then we've got a similar setup to what we saw with Bitcoin. We'd be putting in a low that just isn't acceptable anymore, at least for a positive trend. And then you have to ask yourself, is this the start of a rollover or not? If those green arrows stay in play, the target zone is still between 27,000 and maybe 27,500. And if everything goes great, 28,000. So we've still got a lot ahead of us over the next few weeks and months, but that's the move up. And this is the move down with the right targets and a structure that could take shape over the next few days.
Let's also check the Russell 2000 and where that maybe familiar purple line could be before things get dramatic.
Yeah, we've got that move here again too. It's always 5, and this would be the 5th one we're expecting. You can see here too. The Russell has actually stabilized pretty well, and it moved up last week as well. So overall, it's still a positive move. The key support, looking down, we've pegged at 2,300. That's also the 78.6 retracement. It's right in that area. So use this as the benchmark together with the 78.6 retracement. So 2,300 points, that's where it could drop if we really get bad news, as the ultimatum runs out. If everything is positive and the move shows the market basically wants to go higher. It's just waiting for a good headline. I can totally see that if the good news hits, they reach a deal, the Strait of Hormuz opens back up, and there's some kind of rule book for how they split up, because both want it, or all three want it, then we'll see the move higher toward a final all-time high around 2,800. So here too, the downside is clear, the upside is clear, and what happens over the next few days, this isn't weeks anymore. It's 1 or 2 weeks, and we'll know.
Let's switch to Bitcoin and look at the whole setup. In our last 2 interviews on Tuesday, we talked about the sideways range and the bottoming phase that still isn't finished. And you also posted in our Crypto Insights Telegram channel about a 5-stage correction. What's the idea behind that?
Yeah. So the two big keywords again are bottoming and sideways action. We had that long sideways stretch here, and then it broke to the downside. That was about 2 months and 2 weeks, roughly. So around 10 weeks total. And now we're about 8 weeks in. If you compare that, we're expecting a decision here within the next week or two. For now, it's still sideways. Just ranging like we always see. And like we said, it's about building a bottom, whatever shape that bottom ends up taking. And first, let's take a look. Lower. We've got a gap from Sunday into Monday between 67.2 and 67.6. It's nothing huge to the downside, but it's there. And historically, those gaps do get filled. So that's what I'd expect here too. In our Telegram channel, I said, kind of like the NASDAQ analogy, 1, 2, 3, 4. And ideally, the fifth leg would drop into the 62 to 63K area. As a correction before we move higher, that would give us a nice clean structure. That brings us into that zone. As part of the pullback, depending on how bad the news is, it could still drop further. How far could it go? We've got 60,000 here. Yeah, that spot tied to the zero line, and around 60,000 you can see the 200-week SMA is slowly coming in as support. If it gets even worse and we really see that final flash, that market wash out before we can move up again, it's still on the table that we drop into the high 50,000s basically, dipping back below 60,000. It washes out all the weak hands. Only the strong hands stay, and then we push up from there. So those are the scenarios we'll see over the next week or two. Not longer than that, if the timing is comparable to what we had up here. And then I can totally see that it moving higher, and the path up is pretty clear, running through the CME gaps, the retracements, the SMAs we mapped out into a relief rally we keep calling for, maybe up into the area of maybe a max of $112,000. I tweaked it a bit here. Yeah, you could say that was the top, that was the low, and overall we're in a bear market that, if you look at it super negatively, could keep going. I still think we're in a mid-cycle correction. That means it's still a correction within the uptrend. And like we'll see later in the roadmap, I still expect us to get into this area, a continuation rally, and print new all-time highs. This quarter we just kicked off, or maybe at the start of the quarter right before the midterms, but over the next few weeks it should get pretty clear which way we're going, up or down. The way the market feels right now and how it reacts to good news, I'd say we've got some room to the downside to shake out the shaky hands, but way more upside potential if institutions start FOMOing into the market.
You just brought up this 5-phase correction. The question is, what matters more? The fundamentals, like hopefully some good news soon on the Middle East conflict and maybe the Clarity Act not long after that, versus the chart. Do you think we still lean on that correction or drop back into it if both headlines hit pretty quickly? So do you still expect that fifth leg down, or is it basically off the table then?
Yeah, like I said, Elliott wave is always kind of a thing. But this setup here with the 5 steps, 1, 2, 3, 4, 5, is pretty obvious. So I can totally see us going back into that area, 62 to 63, maybe even a bit lower down to 60. Because usually before it really goes up, it tends to drop one more time. Those little washouts you get. And once the little ones get a bit bigger, we can also move up into the high 50s. But that it just goes sideways like this, and then suddenly shoots up unless we get some really great news, like we'll see the Iran conflict is over, the Clarity Act gets waved through with a yes, then of course that creates a certain vibe, and that pushes it higher. And what was a 5-wave move turns into an ABC correction. That's just how it is.
Could be worse. Bitcoin on the weekly chart. Like I said earlier, right at the start, Bitcoin and altcoins have held up pretty well despite the geopolitical situation. We'd seen 2 red weeks, and last week was positive. Bitcoin moved up 4.6%. Honestly, that's pretty good news when you look at the whole situation, right?
Yeah, and before those 2 red weeks, we had a nice green week too. That's here, right here. So it was kind of clear last week would turn green. We were together on Tuesday and it already looked pretty decent. And basically we said it's about strength, like how strong is Bitcoin's move. That's why here, especially since it's the weekly chart, we're looking at the RSI. On the daily chart, it's more about how it moves short term over the next 1, 2, 3 weeks. Here on the weekly chart, it's really about the trend. And here we see the whole bullish phase up to a supposed peak around 126. So here we're already looking at a slightly bigger view. And the first thing we're pulling out, meaning just zooming in on it for a partial look, is this move down. We said, how does the RSI behave there? And the RSI behaves like this. Price drops. Strength drops. And we said, okay, if we want to see a move up, a relief rally, a continuation rally, whatever, as long as it goes up, then strength has to come back in. Meaning, short term, the RSI has to pop higher. Last week we brought in that divergence line and said it needs to get above it. And that green week, last week's green candle made sure it at least got above that green divergence line. And that's already a really good start. A short-term one. Yeah. We could have found a bottom around here, in line with what we just talked about on the daily chart with the different scenarios. That's the short-term view. So if it gets above that, it leads to a breakout right in this area. Medium term, we know. We've got this negative divergence. That means price rises, strength falls, and at some point, back here it tips over. That's why we know it'll roll over sooner or later, together with the US indices. And long term, we know we probably had a base forming here too. That actually looks pretty good when you look back in the past. RSI has never been lower than it is now, so the odds are actually fairly high that we've seen the bottom. If you line up the short, mid, and long-term RSI, you can tell this could have been the base, but it won't just go up forever. It'll definitely roll over again. That's the clear signal in that negative divergence. But until then, I think we can still get a solid move up, and I'll say it again. That kind of move could get kicked off by the US government saying the war is over. We stimulate the market with tax refunds and extra financial aid. The Fed keeps pumping liquidity into the market. Maybe there's even an interest rate cut, an emergency cut. We'll see the rotation when you look at the last slide in a second. The liquidity that got pulled out of the market when the war kicked off, maybe that, along with what got pulled out of gold, rotates right into our crypto too. We'll still talk about the Clarity Act, and I'll also say a bit about Morgan Stanley in a minute, because that's a great story too. So there's a ton of good news, either already here or that could still develop, and it makes sure the technical setup also plays out in real life.
Oliver, let's also look at this on the monthly chart, and you can see pretty clearly when we finally broke down last fall and basically entered the bear market. And yeah, the MACD is obviously a big one we're watching here too. Why?
Yeah, for a long time we kept the monthly view in to show a bearish setup from a technical standpoint. That was the phase where we said, if the MACD flips from the green zone into the red zone, that red line, then the odds are just really high. We're heading into a bear market. You could see it here, and you could see it here too. That was our reasoning. And our heads up that we could move that way, which then actually happened, even though I didn't think it would. Now I'd like to turn that around, and we always have these three lines. The gray line is the peak. The red line is the confirmation of the bear market. And the green line is basically the bottoming phase in the bear market. And you can see it really well here. The moment it flips from dark red to light red, you're usually already down in the lower part of the bear market, where it's forming a bottom. That's basically what we had here too. And if you look at this here, we've had 5 down months. Then March finally gave us a month back in the green, up 1.9%. That's the second to last candle, and the last candle is basically April getting started. And if we end up getting a good April, then it could totally be that this last red bar down here in the MACD histogram turns light red too, like it did here, and we're on our way back up. That's what we need to watch this month, and we'll be tracking it over the course of April. Keep an eye on it, because the current monthly candle is basically already priced in with the moving averages. And you can see, like here too, how the moving averages are moving closer together, which eventually pulls us into this light red zone. That whole setup is what we want to watch going forward, and this is the regular view. So not logarithmic, it's linear. Let's take a look at the Bitcoin news. Strategy is buying another 330 million bucks of Bitcoin. Spot Bitcoin ETF was basically flat last week. Yesterday we had 471,000 of inflows, so it was a really good day, even though it was the second to last day before the ultimatum ran out. Classic accumulation, institutions are stepping in. And like I hinted earlier, we've got 8.2 trillion, using the European notation, sitting in money market funds in the US. That's a record. So exactly what we said happened when the war kicked off. Liquidity gets pulled out and parked in money market funds. And the second there's positive news, they're sitting there like, all right, where do we put the cash? And then you get the rotation out of those funds into, for example, crypto. Also worth mentioning, we kind of skipped this last week. Morgan Stanley is the first US bank to file for a spot Bitcoin ETF. And then they'll roll out with 16,000 sales reps to sell it. Up to now, they've been selling spot Bitcoin ETFs from like BlackRock, but going forward, they'll do it themselves. And if Morgan Stanley starts doing it, you can bet other banks will follow. And I'm not talking asset managers, I mean banks will jump in too. So that side will definitely create real demand. People are actually putting money to work here. There's real activity. And with good news, something can really happen. This should broaden out for sure. And one more thing that's kind of interesting, which we bring up every year right beforehand, April 15th, is tax day in the US. Meaning you have to file your taxes for 2025 and you actually have to pay what you owe. And if someone had solid gains, maybe even in crypto, and 2025 wasn't exactly a bad year, they might have to sell a bit of their coins to cover the tax bill. So that's something to watch too. I've never tracked whether it really has a big impact, but it'll be interesting to see what happens on and around April 15th. So yeah, overall, those are all pretty positive headlines that can give this whole thing some momentum and push it higher. Hopefully now the other way around, after months of staring at the red line, it starts taking us up toward the green line.
Let's switch back to the weekly chart and check out the altcoins. Because all the positive stuff you just teased has to actually play out first, and we'll have to give it some time. Or patience, like you always say. On the altcoin side, we've got Ethereum and XRP again, but in the weekly view this time. How have they been doing?
Yeah, we also had those two side by side in last week's weekly view. I've been saying for weeks now it's moving pretty similar to Bitcoin in a phase like this, where everything's tense. You naturally watch the biggest market, and that's Bitcoin, and the rest follows, or should follow, and not get left behind. You can see it here with Ethereum. We've seen that move, the sideways move down, the sideways move, and it's pretty clear. The moment Bitcoin drops to 60K on bad news, or the high 50s, our key support here is 1T500. As support, that's important. With XRP, it's a bit different. We said if XRP drops, it can easily go to 90, 95 cents, or even down to $1, because there isn't much support here, in support to be found. The nice thing with ETH is you can see it really well, the RSI 2, if you draw that line. It's broken slightly upward. That means the strength is there, and the odds we're forming a bottom here, like with Bitcoin, are really high. That matters because Ethereum is number 2, and it has to pick up so the others can pick up too. And what you also see clearly on the weekly chart, which we didn't have with Bitcoin, we only looked at RSI there, is MACD on the weekly chart on ETH. And you can see the moving averages coming really close together. With another green week, or even this week if it ends up green, the whole thing could flip already. The strength is there, and that suggests we're really in a bottoming phase here that could wrap up in 1, 2, maybe 3 weeks before we can head higher. And it's the same over here with XRP, which is structured a bit differently. In just a few weeks, it'll make the move up, and unlike this nice step-by-step base, here it's basically been a steady move down. You've got to bring patience. There's really no other option. But in the end, that patience pays off, because when Bitcoin picks up and Ethereum picks up, then XRP will pick up too and probably outperform the other two.
Looking at number 2 and number 3, Bitcoin dominance probably hasn't changed. So you still can't really see the baton being passed as long as Bitcoin is just drifting around where it's drifting. We've got the color chart back today for the first time in a few weeks. I'm guessing you still had some leftover Easter egg dye to make it a bit more colorful, but there isn't really much change in it, right?
Pretty much none at all. But WWE, I just wanted to bring it back in again. Not so people can say, they're trying to sweep this under the table, under the rug, like they say. So April 7th, today's date. That's the first block. Those are the big US indices. Nothing's changed there. The DXY, we talked about last week, tagged 96, just like we'd mapped out. That's why it's green and pushing higher. Gold and silver also hit their so-called peaks for now. Before they get back up there, after going sideways or dipping, that'll take a while. And now it really comes down to one main question. That correction we just talked about on the NASDAQ with those two support zones and on the Russell. How much further does this correction go? And is this the pullback before the final all-time high? Meaning, when we look at the top block, there are basically two outcomes. These yellow areas that show the phase we're in right now either turn green and we hit the the all-time highs, like we said, or they move up and we roll over before that. The correction prints lower lows, and from those lower lows, the US indexes can't make new all-time highs. Then the rollover happens, and we'd have to turn all this yellow stuff red, which I don't really think will happen. Then there's the Bitcoin section. Here we had the first big phase, basically the bull market up to the 126 all-time high on the 6th and the 10th, and we called that more than a year ahead. We said liquidity would come into the market, and that's what the Fed's doing. You can see the US indexes moving up pretty well. Then what happened was we didn't get a higher low like we wanted for trend continuation. We clearly got a lower low, which raises the odds of a rollover. What that means still, continuation is on the table. That's my personal take and my roadmap. So it's yellow. And the moment we don't see new all-time highs up in the 140 to 150 area anymore, then everything up to here turns red. Then we were wrong. Otherwise, at some point it turns yellow, and hopefully then also green. Yeah, and last but not least, we've got the altcoins. We had the alt already started to turn a little green, since some altcoins had already hit their 2021 all-time highs, like Ethereum and XRP, before correcting hard again. Like we said, once we get a continuation rally, these targets are there in case it's only a relief rally that maybe runs to 90, 100, 105, 110. Then you can assume the coins listed here will at least tag their 2021 all-time highs and maybe even break above them. Yeah, and then we'd move into the bear market. We said some people think we're already in a bear market. I've been calling it a mid-cycle correction. We'll see. That should sort itself out over the next few weeks. On the model portfolio, the peak was 341%. Right now we're up 121%, tax-free. This portfolio isn't even 2 years old. So yeah, we've taken a hit too. We're basically at like 30-35% remaining value in the portfolio. But if you've been in from the start, you're still clearly up. So that's the roadmap. And I'm assuming that in the next 3-4 weeks, we'll be able to
see some other colors?
Bring colors back in again, probably green.
You mentioned it earlier. That's the plan you're following, so it's not investment advice. What we talked about last week was that you feel, or you're assuming, the pressure to the upside is still building, meaning the markets want to break out. What are you basing that on, or who's really driving this?
All right, if you deal with this stuff every day and watch how the market reacts to good news, you kind of develop a feel for it. I mean, feelings and the stock market don't really go together, but you still end up thinking good news makes it pop, while bad news pushes it down, less than you'd expect. So yeah, I think if we really got two good headlines, just two good headlines, and that's basically the title of today's video, that would be enough, in my view, to really push the whole thing. The Iran conflict with a good resolution and the Clarity Act. On the Clarity Act, it looks like April or May at the latest. They're expecting a vote. After that, you've basically only got June. Then the Senate goes into the summer recess, and then it goes into the... So either they pull it off in April, May, or June, or it's not happening this year. But I'm assuming they'll ram it through no matter what. And a few senators are even posting about it on X now. So this is definitely getting done. It will happen, yeah? April, May at the latest. And in the end, that means, and we've talked about this a ton, that a massive amount of institutional money is sitting on the sidelines, ready to invest in the market in a way that's compliant with the rules, because the market is regulated, legally regulated. So yeah, not a lot of good news, I guess, but these two alone could be enough to push the whole market. And by push, I mean somebody has to actually be there buying. And we've been saying it again and again the last few weeks and months that the buyers are changing. And there's something here from River, bitcointreasuries.net. 2 charts I dropped in here. The first chart shows the change in Bitcoin ownership in Q1 2026. You can see retail, basically the individuals sold off big time, while institutions like funds, governments, and regular companies bought a lot. And that makes the shift really obvious. They mapped it out here again. Here you see Satoshi in the purple section, what he holds. Then you see the lost Bitcoin, which is a pretty big chunk too. And then, as of today, you still see the big holder group of individual private owners. And then up top in green, government, businesses, funds. And the rest, that can still be mined. All the way up to 21 million. So you can see who the owners are, and it's pretty clear this is the outlook through 2035. So where will the buyers come from? Who, once the Clarity Act is in place, will jump into the market in a big way? You can see retail fading out here, and it becomes more and more an institutional story, basically the pros. And yeah, we said it plenty in our first year when we got into blockchain and crypto. For the first time, retail investors, regular people, got the chance to get into a booming, once-in-a-lifetime market before all the pros and institutions, because they can only come in once there's a rule book, at least somewhat. And yeah, all I can say is if you don't take that chance, that's on you. Because at some point, this whole thing here will steamroll you. Because while individuals might say, yeah, the price set is too high for me now, I'm not getting in anymore. The institutions say 10,000 up or down, 50,000 up or down, I need this on my balance sheet. I'm buying more. And in my view, that's where the FOMO will come from. If we go into a relief rally, maybe even a continuation rally, if we keep moving up. Once the Clarity Act is there and institutions are allowed to buy on a bigger scale, and the first one starts, the second joins, the third follows, that's when the FOMO effect hits. We have to buy now before it gets too expensive. And then this whole thing can get the push we're all hoping for toward new targets.
Still, just so we're clear, we don't need to say again that the Iran conflict is basically in its final stretch, either toward a deal or toward more escalation. I think it's pretty much a given we'll get an outcome here soon, in a few days or even a few hours. But what if the Iran conflict, no matter how it plays out, is over and the Clarity Act doesn't happen? Then we basically don't have the big headline everyone's waiting for, the legal classification and who falls under what, which could also pull institutions into the market. Would that already be a possible reason, like Iran calms down, but the Clarity Act won't come before the midterms? Is that basically the guillotine for the rollover?
I don't think so. I mean, I think that news by itself is enough to give the whole thing a push upward. The Clarity Act would just be a second big kicker on top of that. And here it's basically the classic crypto world up against the banking world. And I heard an interesting take that actually makes a lot of sense. Someone said the Clarity Act is more important for US banks than it is for the crypto crowd. Because you might think the banks are the ones fighting the Clarity Act, right? Like they don't want yields on stable coins, and they basically don't want it at all. And his point was, if the Clarity Act doesn't happen, banks don't have a way to enter this market. And if it only comes in 2027, meaning it gets pushed way out into next year, then US banks have to sit on the sidelines. And that means they fall behind. Competing with European and Asian banks that can already do it to a certain extent because the rules are much further along over there. So I'm assuming the crypto scene wants it, the crypto scene needs it, and the banks need it too, and the US government needs it as well. So it's a win-win-win if we get this thing through. Sometime in April or May. Anything else would be a massive disappointment, but life would go on even without the Clarity Act. I think the crypto scene needs it less than the banking world does, and then things just keep moving, just not as fast. But it keeps going.
Those are, of course, positive headlines we're all hoping for, just like an early end to the conflicts in the Middle East. So I think we can look ahead pretty optimistically, and maybe next week, in our next interview, we'll already be talking about nicer stuff. Thanks a lot for today, Oliver. And for you at home, that nicer stuff is coming up, and you'll get all the important updates from us. All you have to do is tune in. Thanks for watching.